Hey everyone, welcome back to my channel. Today, we're diving into a topic that's crucial for anyone looking to secure their financial future: investing for beginners. Whether you're just starting out or looking to enhance your financial knowledge, understanding the basics of investing is a key step towards building wealth and achieving financial freedom. So, grab your notepads and let's jump into the world of investing. Number 1. The basics of investing. 1. Definition of investing. Let's start with the basics. What exactly is investing? At its core, investing is the process of putting your money to work in various assets with the expectation of earning a profit over time. These assets can include stocks, bonds, real estate, and more. 2. Why invest? So, why should you consider investing? Well, investing provides an opportunity for your money to grow over time, potentially outpacing inflation. It's a powerful way to build wealth and achieve financial goals like buying a home, funding education, or retiring comfortably. 3. Risk and return. Now, every investment comes with a certain level of risk. Understanding the relationship between risk and return is crucial. Generally, higher returns are associated with higher risk. It's important to find a balance that aligns with your financial goals and risk tolerance. Number 2. Types of investments. 1. Stocks. Let's talk about stocks. When you own a stock, you own a piece of a company. Stocks are considered riskier but offer higher potential returns. They're traded on stock exchanges and prices fluctuate based on company performance and market conditions. 2. Bonds. Bonds are debt securities. When you buy a bond, you're essentially lending money to a government or corporation in exchange for periodic interest payments and the return of the principal amount at maturity. Bonds are generally considered less risky than stocks but offer lower returns. 3. Mutual funds. Mutual funds pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other securities. They are managed by professional fund managers, making them a convenient option for beginners looking for diversification. 4. Real estate. Real estate involves investing in physical properties, such as residential or commercial buildings. Real estate can provide rental income and potential appreciation over time. It's a tangible asset that can add diversity to your investment portfolio. Number 3. Getting started with investing. 1. Set clear financial goals. Before diving into the world of investing, it's crucial to set clear financial goals. Are you investing for retirement, buying a home, or funding your children's education? Understanding your goals will help shape your investment strategy. 2. Emergency fund. Building an emergency fund is the foundation of any solid financial plan. Before investing, ensure you have enough savings to cover 3 to 6 months' worth of living expenses. 3. Understand your risk tolerance. Knowing your risk tolerance is key to crafting an investment strategy that aligns with your comfort level. Consider factors like your age, financial situation, and how well you can withstand market fluctuations. 4. Educate yourself. The more you know, the better equipped you are to make informed investment decisions. Take the time to educate yourself about different investment options, market trends, and basic financial principles. Number 4. Choosing investments. 1. Diversification. Diversification is a fundamental principle in investing. It involves spreading your investments across different asset classes to reduce risk. A well-diversified portfolio can help protect against the impact of poor-performing assets. 2. Dollar cost averaging. Instead of trying to time the market, consider using a strategy called dollar cost averaging. This involves regularly investing a fixed amount of money, regardless of market conditions. 3. Research and due diligence. Before investing in a specific asset, conduct thorough research and due diligence. Understand the company or investment vehicle, analyze historical performance. Number 5. Investment accounts. 1. Retirement accounts, 401, and IRAs. Take advantage of retirement accounts like 400 and ONICs and IRAs. These tax-advantaged accounts allow your investments to grow tax-free or tax-deferred. 2. Brokerage accounts. Brokerage accounts are standard investment accounts that allow you to buy and sell a variety of investments. While they don't offer the same tax advantages as retirement accounts, they provide flexibility and accessibility. Number 6. monitoring and adjusting your portfolio. 1. Regularly review your portfolio. Investing is not a set-it-and-forget-it activity. Regularly review your portfolio to ensure it aligns with your financial goals and risk tolerance. 2. Stay informed. Stay informed about market trends, economic indicators, and changes in your investments. Being aware of what's happening in the financial world allows you to make timely and informed decisions. 1. Emotional investing. Emotional investing. Emotional investing, such as panic selling during market downturns, can lead to poor decisions. Stick to your long-term strategy and avoid making impulsive moves based on short-term market fluctuations. 2. Chasing performance. Chasing the latest hot investment or trying to time the market can be risky. Focus on a disciplined, long-term approach rather than chasing short-term gains. In conclusion, investing for beginners is about building a solid financial foundation, setting clear goals, and understanding the principles of risk and return. If you found this guide helpful, please give it a thumbs up, and don't forget to subscribe for more valuable content. If you have questions or topics you'd like us to cover in future videos, drop them in the comments below. Thanks for watching, and I'll see you in the next video.